Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good Tuesday morning. Well, we've listed down all the stocks that we're tracking, but help us out with further analysis. We have Prakash Diwan who joins us on the show. Hi, Prakash. Good morning. Good to see you win. I wanted your view, Prakash, on two stocks that have got absolutely slammed. One is Protein e-Govern, that is down, I think, close to 30% after they missed out on the PAN 2.0. And the other one I'm talking about is Jindal Saw. Now, valuation-wise, sub 5 times EV upon EBITDA, stock down 30% again in the last 6 months or so. And now they've announced a capex that will help them, gives them some confidence with regard to growth. Your view on either of these names, both of them have got hit very, very hard. And now overnight, there is some mild positive news as well. Your take.
Good morning, Nigel. So I think I'll start with Protean. There you have, a setback which was absolutely unexpected. Now, the assumption of them getting the PAN 2.0 project was kind of penciled in, built in, was taken for granted to a large extent. But probably there's some issues because of which they've been kept out of the RFP process. And what is now happening is that the company is probably looking at levers to grow beyond just the PAN business, which is great as well, because there's so much that is likely to be happening in the digitization infrastructure space that the company will play a very pivotal role in all of these projects, which usually are sponsored by the government, but have to be executed at a very far, boots on the ground kind of an approach. So there is possibility that the organic growth will catch up. It's a great business, difficult to replicate, entry barriers, you have everything there. And I don't see any reason why you should look at it afresh at these beaten down levels. And very clearly make an assumption that PAN 2.0 doesn't come and kind of, change things overnight. But organically from here as well, closer to $1,000, if you look at a CAGR of about 25%, there's no reason why it cannot clock that. So it's good for the steady kind of, portfolios, but it's no fireworks at the moment. So, but I think the bottom has been made. The organic growth will kind of start playing catch up, and you'll probably forget about the setback. On Jindal Saw, this thing is very clear. We've looked at pipes before. We've seen how Welspun did so well because they had a very unique mix of domestic and international businesses to kind of support. It's already done about 40%, 30-40% from the time we spoke. But here you have a company that has built huge capacities, has done some good acquisition, the Srikalasti thing and all. They've built themselves up for a lot of business going forward. But there's somewhere or the other, there's growth, this thing. The growth has been anemic. We've not seen some levers, vectors support that. Probably this sets, the trend to in a different zone where you will start seeing some international exposure coming their way, which was missing. So I think the companies realized what was missing. They're trying to plug those gaps. Let's see. Of course, execution is always a big challenge in these kind of businesses because there's so many complexities in terms of order flow, execution timelines, and all of that. So we'll wait for that. But remember, these are JVs, so you will have a little bit of a diluted impact. These are not like 100% owned subsidiaries or something. So I would believe there's a turnaround that's imminent, but I would wait to see some numbers on the screen before actually buying into it. But Protean, I think, is probably a bottom fishing kind of a stock at this moment.
Okay, Protean. Let's see what kind of gain it manages to get and, if it sustains. Prakash, hi, morning. Speaking of turnaround stories, I think the market is looking for exactly that, right? Probably explains the kind of trading that's going on around IndusInd. Look at Bandhan. Bandhan has had such a rocky ride last couple of years. And now there's so much excitement with the RBI moves coming in. Generally, there seems to be a lot of excitement in Tier 2, Tier 3 lenders. Jana has put out an application now. They want to be a universal bank from a small finance bank. What would you buy? Any ideas? Tier 2, Tier 3 financials.
So, good morning, Survi. So, that space is always fraught with a lot of volatility in this because the news flow can throw you off the mark in a very significant way. And a case in point, let's say, is RBL Bank. Just about 4 months back, RBL Bank was probably at closer to 150 or even lower. But look at how smartly it's moved. If you see somewhere around Jan, I remember, when things started looking ugly for them, there were a lot of revelations that came through. The calls, kind of brought in a lot of anxiety and fear, and nobody's been talking about it. But connect this with another data point, and that is M&M is looking at acquiring or adding to its stake in M&M Financial Services.
Yeah, I saw
M&M
that.
has,
Correct.
yeah, M&M has a lot of interest in RBL Bank since quite some time. It keeps coming in flashes. It's not something which is a continuous story. It's a developing story, as you call it. They're buying into M&M Financial. They're adding their stake. They've got a stake in RBL Bank. Somewhere you'll probably see some corporate action around that, because this is very clearly anecdotally, what sets the precedent for these kind of things. So I'm not saying that's a reason to buy, but I'm just telling you. You spoke about Bandhan turnaround, Jana Bank, of course, looking at moving to the next level. Here's RBL Bank, which actually had so many issues, but it's moved from that 150 sub 150 zones to now what 225, 230, which has been done very quietly. So smaller banks will do that. I mentioned DCB the other day. It's kind of done so well, and this gold financing thing is actually going to help a lot of these small banks, whether it's CSB, whether it's South Indian Bank. But you don't just buy these banks for a particular portfolio. You will need to look at them in terms of how strong the balance sheets are, what kind of growth they're sitting on. From that perspective, I think some of these still don't qualify. But if you had to take a tactical, exposure, some of these smaller banks that I mentioned could probably DCB could continue to do well, given its focus on SMEs and the way credit expansion could kind of help some of these niche players rather than the larger ones. So of course, ICICI and HDFC and all continue to grow for their own reasons, but as you asked, from the smaller banks, mid-sized bank, I think this is the pocket to look at.
So DCB Bank and RBL Bank, with the caveats, are obviously not stocks for the faint-hearted, right? Those
No,
are the two
absolutely. RBL could still throw you off gear, so be careful.
Right.
But I'm just giving you this thing on how things have changed.
No, absolutely. And, with what else, Prakash, are you kind of doing? Sometimes, the thing is, any small good news, things are kind of finely priced, so you're kind of latching on to stuff, right? Even small positives, and market kind of bids up those stocks disproportionately. Not in the case of financials, which I think is the only more reasonably priced part of the market. What's your sense? Defense, for example, continuing news flow, and I think we're going to focus on this. We focused on it on the editor's playbook. You can catch that on CNBC-TV18 Access, which is, of course, our new offering. And we did a deep dive discussion. We're going to focus on it again this Thursday. But anything there or any other areas? I mean, these are spaces where you kind of sort of have a bit of a tailwind as well.
Oh, absolutely, Prashant. So, by the way, before I go into the stocks, I just want to tell you and congratulate you and the team for the CNBC Access, output. I think it's absolutely breathtaking. I mean, it's so convenient, so simplified, and so nice to use. I loved it. And I'm sure we'll hear more of that as well going forward. You need to look at defense. What's going to happen is there will be a set of headlines which will keep attracting attention, of course, for obvious reasons. But let's say the QRSAM order book, that's kind of likely to be unleashed, if I were to use that term. And we have big amounts being talked about there. Now, defense, as we saw, has kind of awakened from a sub 2% or sub 3% kind of allocation in the indices to almost going up to, expectation is to 8-10% in the next 10 years. So there is a secular trend. Now, what you have to do is look at smaller names which actually are going to be benefiting disproportionately because of their size, because of the base effect. And some of these companies that are more into electronics, more into work around the ecosystem, where you have drone technology getting more and more revised and upgraded rather than just shipbuilding and aircrafts and all. The warfare is not going to be artillery and ships anymore, as much as it will probably be driven by airborne techniques. So you will have to choose out of that. They will be the front runners. But we have a lot of catch-up and replacement to be done in the conventional defense equipment space as well. So that will keep happening. I can tell you, L&T, for instance, is probably the most underrated stock on the defense side. I mean, why I'm saying that is because it has a significant presence in defense from a timeline perspective and a quantum perspective. But just because for the size of L&T, the defense play is not very large, it doesn't kind of stand out. But the Pinaka rockets, as I keep saying, the launchers were done by L&T. They're doing so much of work. In fact, they're giving out work to a lot of other smaller vendors in terms of system integration and all that. And the day L&T starts kind of getting recognized for the contribution it has been making and what it can do, you'll probably have a very different multiple getting accorded to that part of the business. Of course, the other business, the core business also is doing so well. So I know it's not a very exciting sounding name to talk about in these markets where you keep looking for new ideas, but I would not give it to FOMO, but I would still latch on to something like L&T given its numbers and the future potential, and just ride this till the next new high is made. I'm sure you still have about a 10-15% upside from here for this name itself.
That's okay, Prakash, as long as the money is made, right? And they say often the biggest wealth creators are the most boring ones. No harm in being boring as long as it keeps the wealth multiplying, right? Just